Assalamu alaikum and good morning, everybody, and welcome to Grameenphone's Q3 result publication and call. We experienced strong growth and strong financial performance in the third quarter in terms of efficiency and in terms of profitability. Competition intensity has continued, and there has been quite a few new regulatory directives during the time. Implementation of these directives were quite important, and we can name a few. For example, a VAT reduction in data and the implementation of a unified floor tariff for on and off net calls. This tariff was not unexpected, something that we had planned for some months. Also during the quarter, the industry geared up for the implementation of mobile number portability on October 1st. And I would say, and let me reiterate, that there is intense competition in this market with aggressive offers, particularly on data. The unified floor tariff was put in place in preparation for mobile number portability on the 14th of August. And the rate was set at 0.45 paisa on net and off net for all operators. During the quarter, we added 2.2 million additional new subscribers, and I'll comment on the quality of those subscriptions in a little while. The subscription base in the quarter ended 11.8% higher than it was last year, and the Q-over-Q growth was 3.2%. The regulator's reported SIM market share stands for us at 45.86%, and it has remained steady from the last quarter. We now have 3.8 million, at the end of the quarter, 3.8 million 4G subscribers. We closed the quarter at 36.3 million data subscribers. That's over half of our customer base at 50.9%. That was a 21.3% growth from the third quarter in 2017, and the Q-over-Q growth is a healthy 5.3%. The market dynamics are intense here, and that's not new for those of you who follow our business carefully. Competition has intensified with the introduction of the uniform voice tariff. We've seen aggressive competition, data pricing, and the beginning of bundled data offers with price for those who have only a foothold in voice. Remarkably, after a number of years of talk and a number of quarters of significant work by the regulator and the operators in participation and in cooperation with the security agencies, we moved away from paper registration of our SIMs. This is a very important public step towards digital Bangladesh. And so we no longer have to fill out a subscriber acquisition form. We actually can do this through the thumbprint and the verification online in real time of the national ID. This is much more convenient from the customer's end and actually saves us about 33 taka per customer sub acquisition. So, almost 40 euro cents. It's really a good story for us, and it's a good story for the industry. It's a good story for the integrity of data, and it's a good story for digital Bangladesh. Mobile number portability, that was introduced on the 1st of October, and it's early days in this particular exercise, but it has not had a significant or at all significant impact on our business. We've actually improved our annualized churn rate, and now it stands at 13.7%, which is unabashedly remarkable for a prepaid marketplace. The unified tariff actually helped us increase revenue by 9.6% on voice year over year and 9.3% quarter over quarter. The outgoing minutes of usage dropped somewhat, but they're now starting to come back up, and we see that that is what we expected. We have changed our portfolio of voice products to some extent, and we've added in a number of new packages, TACA 78 and TACA 113, a monthly pack for 199 TACA, and a very short duration 9 TACA scratch card to fill the needs of the marketplace for sachet-sized purchases, which are very popular in markets like Bangladesh. We see competitive pressure on data pricing, which is not unusual as 4G comes into place. But the VAT reduction on internet from 15% to 5% to encourage data penetration by the government was good for the industry. It improved our revenue about 8 million TACA per day, recovering from another change that happened in the marketplace in June, if you remember in the last report, where the pay-as-you-go limit was introduced at 5 TACA per day. Overall, we've had a significant data revenue increase of 16.8% data revenue growth year over year and 9.4% over the quarter. So we've also introduced new value propositions in data at 104 TACA and at 38 TACA. And we've had a healthy growth in quarter-over-quarter healthy growth of users in data of 5.3%, which would be 21.3% year over year. The next item would be we have reached now at the end of the quarter 3.8 million 4G users. That is a remarkable growth given that at that point we were roughly 6 months in to the 4G launch. And we were still in the middle of our rollout. We have so far rolled out 4,745 sites. And this is not just rolling out new radio. This is actually RAN modernization at the same time, moving us towards a single RAN infrastructure, preparing us for the changes that will come in the future. Interestingly as well, 44% of the subs that have in our 4G coverage areas already have 4G SIMs in their devices. So there's some significant upside, and we want to move as many customers over to the 4G network to help offload the 3G network. We have 36.3 million data subs, just over half of our base, as I mentioned earlier. The 4G volume continues to grow, and that's as expected. And also, I would say 3G will continue to grow at least into the next year. This is very encouraging, and we are preparing both our networks and our operations to support very rapid growth of data coming in the future. Our 4G network is already covering 30% of our total daily traffic. And that's amazing given the small number, relatively speaking, of 4G subscribers currently on the network. We've already reached, although we have at the end of this quarter 3.8, we're rarely above 4 million now. We're pushing hard on 4G SIM replacements, and we're looking at free replacements in some cases for our high-value customers and business customers, and door-to-door replacement for our higher-value star customers. And we are going to continue to focus, as we have, on providing the best possible network experience for our customers, and we have not come close yet to finishing our 4G rollout. That will continue to the end of this year and well into next year as well. Let me speak a few minutes now on the regulatory landscape. The BTRC audit, that final report was accepted by the BTRC in a commission meeting on the 19th of July 2018. We have received a copy from the BTRC on August 26th with a request for us to provide comments. We shared our comments with the BTRC in 2 phases on the 6th and in the 19th of September. We have a few other small items that we need to respond to, and that will happen over time. The BTRC has not at this point come to a final position on the audit. We continue to engage with them, and we are hopeful that this will come to a good outcome. The tariff circuit on data is a possibility as well. As we spoke earlier, there is a tariff circuit change on voice. We have information from the BTRC and a request from the BTRC to actually provide some input on what we would do on the data tariff. They are looking at a floor and a ceiling price. Our view, quite frankly, is we prefer to have the market determine what the pricing should be. That is the appropriate way we think to do things. However, we have provided our views to the BTRC should they decide to establish a floor price, and then we will assess how we can operate within that floor price thereafter. Mobile number portability, as I said, was launched on the 13th of August 2018, and it has essentially not been a major factor for us at all. We agree that the customers should have the freedom to use their number as they move across, and we are continuing to refine the systems. This is only about 3 weeks into the launch of MNP, but the impact has been quite negligible on our business, and it's not something we intend to promote or to encourage, but it is there as a service to customers. Overall, the losses have been negligible for us, and we have not promoted this at all. One of our competitors has aggressively promoted MNP at the beginning of the exercise. We have chosen not to do so. This is a service which is extremely complex to implement. There are roughly 30 different players in MNP in Bangladesh. And when the system has, in fact, stabilized, we may consider doing more. But right now, it doesn't seem to be a good case to spend any money on this. The last item in the regulatory piece is the tower licensing guidelines. 4 firms have been selected and have deposited their application fees along with their bank guarantees. We understand that they have until the 20th of October to form the companies and get the licenses awarded. We are not happy with the idea of not having the right to continue to build our own towers, but given that we have somewhere between 14,000 and 15,000 towers in place by the time this regime comes, it will not have a huge impact upon us. We will, however, look for one or more of these companies to continue to build towers for us and to seek sharing opportunities that we may avail ourselves of in the future. But the tower company business for us as an operator is something that we would have preferred very much to have a place in this market, and we hope that the regulator will ensure that this is a competitive marketplace and not quasi-monopoly or duopoly. And let me speak finally on our commitment to sustainable development. Our flagship program is Be Smart, Use Heart, and it is a program that is used to sensitize children, teachers, and parents on the safe use of the internet. We think this is a responsible extension of our business, and we have this year an extremely ambitious program to meet 400,000 school children face-to-face and give them some training on safe use of internet. Also, we'll be meeting 50,000 teachers and parents, and this initiative is one that we take quite seriously. I think we have already done, this slide says by the beginning of October, 175,000, but we're now past 300,000 children that we have met. So we're hopeful that we're actually going to beat our target. We have a very fundamental role in the economy and the society of Bangladesh, and we take it very seriously. It's part of our social license to operate, and we will continue to play a role as a responsible player in society. With that, I think I will pass it on to the meat of the presentation, which will be Karl-Erik Braathen, our CFO, will now talk about the financial side of this report.
Thank you, Michael, and good morning, everyone. I hope the sound quality is good. I will try to speak up so that everyone can hear. As Michael mentioned in the introduction here, it's definitely been a quarter with a lot of changes in the regulatory environment and also quite intense competition, especially on data. But nevertheless, it's a pleasure to report a significantly stronger financial performance in the third quarter with increased growth, efficiency improvements, and strong margins. We are reporting 7.6% growth in subscription and traffic revenues, and as we have been informing earlier, at the beginning of this year we made a change in the way we are accounting for third-party content revenues. So on a net-to-net basis we have a 9.1% growth in subscription and traffic revenues for the third quarter, which is a significant improvement from Q2. We are reporting a very, very strong EBITDA margin, 61.9%. As you will see from later in the presentation, there are some one-off items, so on a normalized basis this will be lower, but on a reported basis this is 3.2 percentage point margin improvement year over year. For the last 4 quarters we have a capex to sales of 13.5%, so we have been investing more, and as Michael was pointing out, we are rolling out 4G, but we are also extending our 2G and 3G footprint and doing capacity investments into the network to secure that we have the best network in Bangladesh. Earnings per share 6.58. If we normalize for one-off items, IFRS 15 adjustments, the underlying improvement is 17%, but on a reported basis we have a 27.6% growth in the earnings per share this quarter compared to the same quarter last year. Moving on to the revenues, we have on a reported basis an increase in total revenues of 1.1 billion, which is a growth of 3.4% year over year. But again, if we normalize for changes in the accounting treatment and on the total revenues, this also relates to how we account for devices. We have a growth of 2 billion or 6.1%. Of course, driven by the strong growth that we have on subscription and traffic revenues of 9.1%, and the strong growth especially on the voice revenue side of 9.6%. We have somewhat lower value-added services and device revenues due to the accounting changes, and also we have seen some reduction in the interconnect revenues due to the unified floor price.
Can you speak a little louder, please, sir?
So that the unified floor price is now 45 paisa, and the off-net prices have then gone down. We see that we have a reduction in the outgoing minutes of usage.
Who's answering the financial questions?
And we have, but of course, offset by a 7.1% growth in voice average price per minute. We have, what Michael was mentioning, an increase in our customer base of 2.2 million, which is a 12.1% increase in the base. Moving to data, we have 21.3% increase in our data subscribers. Michael mentioned we have 36.3 million active internet users now, more than half of our customer base. We have a volume growth year over year
Okay.
of 84.8%.
Take the mic.
I think I have to use the mic in order to for everyone to hear what I'm saying. The data revenue growth is 16.8%, which of course is driven by the growth in the data volumes, but partly offset by a reduction in the average price per megabyte of 36.8%. We see, of course, that the competitive landscape is focusing a lot on data, uptake of 4G subscribers, and also continue to drive 3G. Moving to ARPU, we have a decline in the service ARPU year over year of 5.4%, and 3.7% decline on the data ARPU, coming of course from the increased competition. On the overall service ARPU, the decline is coming from voice. If you look year over year, of course there is an improvement versus Q2. And the lower voice ARPU is driven by a 8.7% fall in the outgoing minutes per user, but partly offset by the 7.1% increase in the voice average price per minute. We have lower interconnect ARPU due to lower incoming minutes and the revised interconnect rates. We have a 3.7% degrowth in data ARPU, which is of course mainly driven by the 36.8% reduction in average price per megabyte.
We still can't hear you.
Partly offset by a higher 52.4% average megabyte per user. So we have an average megabyte per user now, which is above 1 gig. It's more than 1.1 gig. And quarter over quarter, average price per megabyte erosion is 10.8% due to the competitive situation. Is still the voice too low? Because then we need to do something. It's all right?
They're saying it's all right. Go ahead.
Yeah, then I'm moving over to the margin side. And we have a very strong EBITDA uplift of 1.7 billion. That's the normalized, when we normalize for one-off items in Q3 this year and Q3 last year. Looking at the right side of the presentation, you see the OPEX development. We have on a reported basis an increase year over year of 2.2%. But if we normalize for one-off items in this quarter and the same quarter last year, the normalized OPEX growth is 5%. And the increase in OPEX is mainly driven by the higher marketing activities, promoting 4G mainly, higher rent and energy costs coming from almost 1,700 new site additions compared to last year, and higher regulatory costs driven by the higher revenues. Year over year normalized EBITDA growth is 1.4 billion, and the normalized EBITDA margin is 60.9%, which is 2.2% margin improvement. Of course, driven by the higher revenues and also a gross profit uplift of 1.95 billion, partly offset by the higher OPEX of 500 million. Moving to the investments, we have of course been investing more now that we have 4G compared to the third quarter last year. So we have invested 4.6 billion
into both, you could say, our 2G and 3G and 4G sites. We have, as Michael mentioned, soon close to, or at the end of the quarter, we had close to 5,000 4G sites. On 2G and 3G, we have a population coverage, respectively, on 99.53% and 94.54%. Then moving to the earnings, and as the headline is saying, normalized earnings growth of 17%, but on a reported basis, we have 27.6% increase in earnings per share. There is an uplift of 1.4 billion. And of course, the normalization is coming then from the one-off items, but also from the fact that we have been reporting both according to IAS 18 and IFRS 15. So on an IFRS 15 adjustment and one-off items, there is a 17% increase in the earnings. And the same, of course, on the net profit after tax. We have a good increase year over year. It's somewhat lower than Q2, mainly due to the tax reversal that we had in that we reported in Q2 that gave both a higher net profit after tax and also a higher earnings per share. But there is a good increase year over year. Last slide on the financials. We have the operational cash flow and the operational cash flow ratio to sales, also the net debt to EBITDA. We see somewhat lower operational cash flow in Q3 this year compared to last year because we have been investing more, so CapEx is higher in Q3, but we have a very strong operational cash flow ratio of 48.3%. And on net debt to EBITDA, there is an increase from Q2 due to the dividend payments we did, the interim dividend for 2018, but there is a good uplift from Q3 last year. So to summarize, Q3 from a financial and a business performance point of view, we have a strong business performance, undoubtedly the strongest quarter in this year. Strong EBITDA margins and strong growth in nominal EBITDA. We are, as Michael was pointing out, still acquiring quality subscribers, increasing the number of customers with 2.2 million in the quarter. We are focusing, of course, on keeping our network superiority and to have the best network in Bangladesh, and also have the recognition from Ookla having the fastest network in Bangladesh. And that will be our focus going forward. We have, just to highlight, we have introduced a new number series.
Right.
So in addition to 017, we now have 013. And then I think we open up for questions. And if you have questions, you can post them, and we will be able to read them on the screen here and answer them.
So I'll start with the non-financial questions. Maybe you can take a look at the financial ones and get the appropriate stat if you need it. There's a question about service quality and perception that service quality may have changed or deteriorated in the last little while. I think that is an artifact of the 4G introduction. It's quite disruptive. Right now, we are feeling quite good about service quality. in most parts of the country. There are always hotspots that we need to improve on, and we continue to monitor this almost on a daily basis. In fact, on a daily basis, we know where drops are happening, we know where there's some issues, and I think for us, I think it's something that is our bread and butter, and we continue to work on. We are not satisfied, but we continue to maintain a very high Net Promoter Score advantage on network preference in the country, but we're not complacent, and we continue to work that on a regular basis. Another non-financial question would be, what's the impact on the floor-to-ceiling price on data if it happens? We don't think that that's going to be a material impact. We are observing it. Our pricing is not at the floor, so I don't think or is not the lowest in the country right now. So I think that will be helpful for us. And the ceiling will be put at a place that will not necessarily have an impact on us either. Let me just go to, I think Kyril from City Brokerage has a few questions. Can you give the minutes dropped for when we introduced the common rate? I have that here. It was roughly 4.2% quarter over quarter. It is dropped significantly when it launched, and it's come back materially since then. And my belief in this case is that people's behavior does not change fundamentally. Even if the base rate has increased significantly, the overall average rates are not that different, and it's in paisa per day kind of impact for people, so it's not that material in terms of their costs. The impact of mobile number portability, question number 2 from you, Kyril, has been quite negligible. And if you understand that one of the competitors did really material promotion for the first 2 weeks or 21 days with TV advertising, print advertising, we did nothing. And in total, the numbers have been quite small on balance. And now that these promotions have ended, the impact is even quite smaller. Question number 4 was about this large claim or report of a large claim, which is the audit from the BTRC. Let's be very clear. We have not received the claim yet. That is still being discussed within the BTRC. We're providing all the support that they've asked us to kind of go through this process with them. Understand as well that a big part of that number is an overlap with existing claims that exist already at the NBR. So we are working through this process with them. It is business as usual for us when we deal with this. Let me see if there's anything else that I might want to pass on. Okay. Carl, a few items. Oh, substantial growth in the quarter. Yeah, I think it's been a very successful quarter for us. I think it's important to understand that we don't run after subscribers. Our commission to retailers for subscribers is smaller. Our promotions to acquire subscriber are less aggressive. So that tells me that we're doing something right. The other part that's important here is we actually ration SIM cards, and we provide them only to those retailers that give us quality ads. So our survival rate after 90 days is approaching almost 90% in some areas of the country, on average about 85%. So a customer that comes with us on day 1, 85% of them are still with us on day 90. That's really important in terms of spending our money in the right place. So I'm excited by the growth, and I'm excited by the fact that our churn levels are below 14%, which is really unheard of in an industry like ours. So I think it's actually a very good news story. And as we launch 013, we were actually running out of numbers. If you think about how numbers are managed, we had 100 million numbers in 017. We have almost 72 million subscribers now. We have a number of SIMs that are left in suspense after people leave, so that's almost another 20 million. And then you have SIMs in distribution in the marketplace and SIMs used for technical reasons. We had run out of 017, literally run out at the beginning of October. So having 013 in place is going to give us additional opportunity for growth. Okay, I'm going to just leave you with the other questions, which are financial.
Yeah, and I'm terribly sorry that the sound was not good enough when I was speaking. Maybe it's my voice, which is not as strong as Michael's, but let's work on that. I think I would just like to emphasize what Michael was saying, because we are not the one having the highest gross adds in the market, but we have the highest net adds. So we are acquiring quality subscribers. The financial questions that have been posted, it's a question about why is cost of goods sold so much lower in this quarter compared to last quarter, to same quarter last year. Well, that's the changes we have done in the accounting treatment on value-added services, meaning third-party content. We have gone from gross to net booking of the revenues, so we are not booking the cost of goods sold, only our part of the revenues. The same on the devices. So that's the reasons for the reduction in the cost of goods sold. And then there is a question of why is other revenues falling so much? Same explanation. Because we are booking now only our revenue part for both value-added service or for devices. We are not booking the full revenue for when we sell a device. We are only booking our part of that revenue, so it's revenue minus cost of buying the device that we are booking. Are there more financial questions posted?
Last one, Forex.
Let me just see. Yeah, Forex is difficult because it's fluctuating, and of course we follow. You could say that in Q3 we have both had you could say the interim dividend paid, and of course to foreign shareholders we pay in US dollars. We have also made a down payment on the IFC loan. So, and in you could say this environment where we are today, it's very hard to predict how the exchange rate will be, taka versus dollars. So you will probably see that there are some fluctuations in the exchange rate and also the impact that it have on us. But of course I would emphasize that the impact on GP is limited. You could say that we have one USD loan, and we are buying equipment from international vendors that are in US dollars. But the main cost of operation is in taka, as our revenues as well.
Two questions that have come up. One is, what is the plan for improving your network once the tower sharing regulations come? You can't build new towers, but you can modernize existing ones. That is exactly correct. We continue to be able to deploy on our existing infrastructure. That's very substantial, by far the largest in the country right now. And where we will need to put new towers, we will go to one of the 4 tower companies in a competitive bid to get them either to build towers for us or to lease space for us on another's tower. So there may be some cost increases associated with that, but given the size of the network that we currently enjoy, that will be on the margins of our business. The question as well is stabilizing the cost of data, or the revenue we get from data. There is a question that says, you know, there's a major reduction in data revenue, or data price per megabyte, and an increase in consumption. That is not unusual when you actually launch 4G. If you look at any other market where that's happened, there needs to be a readjustment. The benefit of 4G, it allows us to deliver data cheaper, and we have to move as much of our traffic over to 4G as quickly as we can in order to be able to maintain that. The major reduction in personnel expenses, where did that come from? That comes mainly from a reduction of people in the organization, a change in some of our business models where over time we have outsourced customer care outside to specialists in this area. And I think that's enough on that. I mean, it's basically we're being very smart as we kind of manage our costs in that area. Should we expect this to persist? I think one of the pricing guide, there's a question here about on pricing for data, how long do you think the trend will continue? I think we'll be like any other market, and I think when we look at price floors and price ceilings in data, partially that's done to protect both the consumer and the market. So I think when that comes in place, if it does, then I think it will help stabilize pricing. But again, I'm not a big fan of that. I think the markets can do that themselves. We don't need the help of the government to kind of install price guidelines on data. But if it happens, I don't think it'll be hurtful to us.
There are a few more financial related questions. There is a question here on personnel costs, why it is declining. Is it because of the VRS, voluntarily retirement schemes that we were running in 2017? And yes, we have reduced the number of FTEs in Grameenphone, so we see personnel cost coming down. There is also another question on, I just have to see again, the accounting treatment. How does the change in accounting treatment impact our operating profit? Well, it doesn't. Of course, it increases the margins, but on a gross margin, it doesn't affect. It's just that it went from gross to net booking. So it's the same operating profit that we are distributing. There might be some changes in the revenue share. That's the only thing. And the last question.
I can read that to you.
Yeah.
Any update on how IFRS 16 will be implemented?
Yeah, we are working, of course, with implementing IFRS 16 as everyone else. It will be applicable from 1st of January, basically meaning that all our leases, be it lease of sites, be it lease of fiber, needs to be then put into our balance sheet and depreciated over the lifetime of the contract. We will, as we have done this year, issue 2 sets of financial numbers, one according to IAS 17, which is applicable today, and one according to IFRS 16. This year we have done the same with IFRS 15, so that you see IAS 18 comparable to 2017, and IFRS 15, how that impacts the numbers for us. So that will be the same for us, for the rest of the Telenor Group, and I assume for the entire industry and everyone else who is impacted by the introduction of IFRS 16.
Good. We don't see any further questions on the feed. We'll just wait a second to see if anything shows up. And that will be it. If there are any further questions, please reach out to our IR team, and we'll be happy to get back to you quickly. And if there's a need for a call with any of you, please let us know, and we'll be happy to spend some time with you on the phone as well. With that, we will close this session, and thank you for your participation. Thank you.
Thank you, everyone.